In this presentation, we're going to add the payroll information into our accounting system with the help and use of the bank feeds. In other words, we're going to see the payroll checks go through with the use of the bank feeds and think about how to add that information into our financial statements. Time to rise above the crowd with Sage Business Cloud Accounting. Here we are in our Get Great Guitars Company summary page within Sage. We're going to be opening up our financial reports, going to the reporting drop-down. We're going to be opening up the old balance sheet report first. Once open, we're going to duplicate it by going up to the tab up top, mousing over it, right-clicking on it, and duplicate that tab. And then we're going to go back to the tab to the left, do the same thing for the P&L, otherwise known as the profit and loss or income statement. We're going to be opening up the P&L, profit and loss. Same kind of thing, we're going to be duplicating the tab. We're going to go over and mouse over the tab up top, right click on it, and duplicate that tab. Let's go ahead and check our dates. I think they're okay in my system because I've been working on these a couple times and it seems to save the dates, which is nice. So there it is, I'm on the 12/31/2020. Within the P&L, I'm going to be going from 4/1 all the way out to the end of the year, but we only have information in April, so that's going to be good. That looks good here. Let's go back to the first tab. We're going to be going on over to the banking information in the ribbon. Working with that banking information, we're looking at those bank feeds. We have a couple more items to kind of pull on over to the financials. 11 more to go. Right now, we're dealing with payroll. So if we scroll on down through the bank feeds, we're going to say that a couple of these are going to be the payroll information. So this one including Hamilton here, that we're going to say that's one of our employees. Now remember, there's a couple different ways you can deal with payroll. You could process the payroll through the accounting system, generate the payroll through the accounting system. If you do that, you can have all the detail within the payroll, processing it through the system. Or we can imagine payroll being done basically by a third party like an ADP or a Paychecks, in which case they may process the payroll, then the employees can go to them. They will provide the employees with that added detail, including the check-to-check kind of detail, employee-to-employee detail, including the net check, the gross pay, the withholdings to date, as well as the withholdings for the current time period, and so on and so forth. They'll process possibly we can imagine them processing the payment here, right? And then we're going to see the payments go through on our system. And then we're going to think, okay, how can we add this information to our system with the objective on our side to make the financial statements correct? The objective on our side not being really to provide all the detail to the employees for each item, because we're depending on the third party to do that. Our goal is to take the financials and take that information and make the financial statement correct and depend on them for that detailed information, providing the pay stubs and the year-to-date and the current pay information. So we can imagine a situation like this where we have the payroll information here for, let's say, our 2 employees. Let's say the gross pay, just like last month, right, was $4,583 for Adam. We would take out something from the pay like Social Security, Medicare, and income taxes, leaving a net check. That net check is what we're going to see on the payroll side, right? That's what's going to pull through on a cash basis system. So normally we would have then for each employee the gross pay recorded as payroll expense, then the net check going down, and then we'd have the liability being these items that we took out of the check that we did not haven't paid yet. That liability is in essence an accrual type of thing. So we could enter this into our system and enter the full transaction here, including this liability, and then when we pay off the liability, then we would reverse it just like we would do here. We would see that through the bank feed. Or you could try to be more on a cash basis system and say, hey, look, I'm just going to record the net check here to payroll expense and just record it as the net check, right? And then once you make this payment, possibly with the help of your payroll that's helping you, the third-party payroll processors and ADP or Paycheck, you'll see it come through the system. And then you can record that on a bank feed, a bank cash basis system. It'll come through the bank feed. You'll see it go out, and the cash goes down. The other side could go to payroll expense as well. So that would be kind of trying to make a cash basis system for it. And that's what we'll do here. And so note, when you do this, you're going to want to think about payroll. Anytime you think about payroll, you want to think about setting that up and asking your accountant about it. How's the best way to do this from an ease of use standpoint, and to get everything correct, any adjustments that might be needed possibly at the end of the year for taxes and any kind of financial reporting. But that's going to be the idea that we're going to have here. So we're just going to enter this basically into payroll expense, and that'll make the bank feeds really easy, right? So I'm going to go over here and say, all right, I'm just going to go in and I'm going to say this is Where did he go? Adam is here, so I'm going to copy Adam, and I'm going to put him up as a vendor. I'm not going to set up as an employee, but I want to be able to track the information by vendor, because I'm not processing the payroll through Sage. I'm just going to be entering the data, and I'd like to be able to track just the payments that went to that employee, Adam, by vendor. And then we're going to put this to payroll. So we're going to say payroll, payroll tax. No, I want to go to, here's one. Here's wages expense. I hope I went to the right account last month, but we're going to go to wages expense here. So we got that one. So what's going to happen? And then I'm going to change this to an electronic here. So I'll say it's electronic. So what's going to happen then, this is going to be decrease in the checking account, the other side going to an expense for payroll. So we're going to say, let's record that. Erica, same thing. We're going to do the same thing for Erica here. I'm going to be copying Erica. Going to set Erica up as a vendor, and this is going to go to wages. So wages, there we have it. Didn't pick it up. I'll try it again. Wages, there we have it. Same thing. So I'm going to go ahead and say create that. And then I think we have one more down here somewhere. There's Adam again. So Adam again, notice it's going to the correct account. It's memorizing where we go. So if you do this cash basis method, then it's as easy as anything else, right? It's going to memorize, oh, there's Adam again. Last time you took that to wages expense. Do you want to do that this time? We're going to say, yes, we do. I'm just going to add the reference or the vendor here. I don't want to create another one. I'd like it to pick up because I should have Adam here. Maybe not. So I'm going to add it. So note to make sure this saves. I'm not sure. I just want to double check that it's saving all the time. So if I put Adam there, I'm going to put create vendor. So it'll create the vendor. So we'll make sure that we're going to save that vendor as it's added. I'm going to change the method to be the electronic. Now you might be asking, why does Adam get paid twice this month? Because we're imagining here we're on a monthly payroll. So it's kind of funny that Erica, our other employee, only had one process and Adam had two. Why would that be the case? Note that there could be timing, if we're dependent on the bank feeds, there could be timing differences, especially if we're not doing the electronic transfers, but a paycheck. If we're just paying them a paycheck, then it's quite possible that Adam holds on to the paycheck and we don't see it come through on our side till later, until it clears the bank. And that's just one of the problems with being on a cash basis, not only on a cash basis, but dependent on the bank feeds. Because if you do deal with checks, it could be a long time before someone clears a check in some cases. And we're not going to be recording it, even though we know that we wrote the check, until it clears the bank. So that's just one of the problems that you kind of have to deal with if you're using bank feeds. And that's why the more you use bank feeds, if you're depending on the bank and you're not recording it on your side, you'd rather move away from checks as much as possible to eliminate that timing difference and rather do more electronic transfers, because then there's a lot less of that outstanding kind of item that would happen between them. So that's just, again, one of the things that happened to be on a cash basis, not only on a cash basis, but dependent on the bank feed. So I'm going to go ahead and record this. And there it is. Let's check it out now. Let's go on over to the balance sheet to do so. Let's go and recalculate this. And then we'll go down to the checking account, see what happens within the old checking account. Scrolling down the checking account, we should see, so there's Erica and Adam, the checks happening here. The other side is going to be on the P&L or profit and loss. Let's go on back to the others, to the balance sheet. Let's go to the profit and loss here and recalculate the profit and loss. And we should see wages showing up here. So there's our wages now, expense increasing. Note that if you do a comparison from this month to the prior month, that the prior month is going to have less, even though we're paying wages monthly, and that's a result of the fact that one of the employees didn't deposit the check until the following month. So that's going to be a part of that timing difference, that kind of the cash basis. Note the cash basis doesn't have as good a matching principle. It's just some things are being distorted, as we've seen with the insurance and with the wages here, because we're waiting till stuff clears the bank, which isn't, a perfect matching principle. Doesn't provide that good, nice, clean comparison from one period to the next. And that's just the pros and cons of using a cash basis versus an accrual type of basis. So anyways, that's going to be it for now. Let's get out of here.